In this video, I'm going to be sharing with you guys the little knowledge I have on price action and what has worked for me on the chart. But before I go into the analysis, I want to let you guys know that on the 10th of March, I'll be holding a live stream. And in that live stream is going to be market analysis, forex question and answer. I get to answer some of the questions that you guys, especially as a beginner trader, might be asking. And more importantly, the raw reality of trading, like the reality of trading, if you are really prepared for it or not. So with that said, click on the notification bell on the live session so that you'll be notified once I'm live. So let me get into the analysis and let's start for the business of today. So we are going to start by understanding what price action is. Now, just as the name implies, price action is simply the way market moves, the way price moves in regard to your key levels. When I mean key levels, I'm talking about your point of interest, like your support and resistance, your fair value gap, your order block, and other point of interest that you have. Now, there are different types of price actions, right? But in this video, I'm going to be teaching you guys the two price action that I normally look at and that has worked for me back to back in the forex market. Now, one of the problem I see a lot of people have is they don't even know the right time frame to look at the candlestick from. Because when you are talking about price action, you are talking about looking at the candlestick and trying to predict what is more likely to happen next. Okay, so the best time frame to actually look at the candlestick from is the 4-hour time frame. At least that has been the only time frame that I use in checking out the candlestick movement. So it's the 4-hour time frame. In this video, I'm going to be starting by the price action A. I call it the price action A. Now, in a scenario like this, let's say we are in an uptrend. Okay, the market is buying. Now, as soon as the market gets to your point of interest, which is your POI, okay, the market rejected from that area with a long wick to the upside. Now, the market actually opened, because if you are reading price action, the second thing you should pay attention to is the next candle the market form is very, very important. Okay, the way the market formed the first one is going to determine the way the second one is going to be opened. Now let's say the second candle open like this, and immediately it's open. Let's say the candlestick open from this level. Okay, remember we're in an uptrend. Let's say the candlestick open from this level. Immediately the candlestick open, it started pushing up to the upside. The market started pushing up to the upside. Okay, started pushing up to the upside. Now there is a very high chance that the market is going to firstly come back to your point of interest again before reversing, but most of the time it's more likely to come back to your point of interest again and even take you out of the trade. Okay, if it's getting closer to your point of interest again, there's a high chance that the market is going to take you out of that particular trade. I'm going to show you everything on the live chart as well. Okay, now let's move to price action B. Now for price action B, we are still in an uptrend. As soon as the market got to your point of interest, the market wicked out, the market rejected your point of interest with this wick, right? Now the second candle form, and immediately the second candle form, the market started trading down to your point of interest. Okay, now if it's trading down to your point of interest immediately the second candle form, there's a higher chance that it's going to fill at least 50% of the first wick, which is the green candle of the first wick, before reversing back to go in your direction. Okay, so pay attention to this candle. You see the little difference now. The first one on scenario A is that immediately the second one open, let's say starting from here, immediately it's open, it started trading to the upside. Now if you enter into any position and then the market open and the second candle open immediately and started moving in your direction, trust me, there's a higher chance that that candle is going to wick it down, especially if it's close to your point of interest. There's a higher chance that the market is going to wick down. It will either come back to your point of interest and reverse, or in most scenarios, it will hit your stop loss. Okay. So the way you can be safe with this scenario A is when you're actually trading with the market direction. So always remember to trade with the market direction. Now in the term of scenario B, what we have here is that the first candle, which is the green one, as soon as the first candle tap your POI, as soon as the first candle tap your POI, it wick back with this rejection. Okay, wick back with this rejection, and then the timer of that candlestick pass. Now the second candlestick open, this second candlestick came down first. Most of the time it will fill 50% of it, because most of the time the second candle will not be lower than the first one in the terms of a buying market, okay, before actually reversing and moving to the upside. Now the question is, in which time frame are you going to check the second candle? That is very, very important. In which time frame you are going to check the second candle. Okay, now if you took the trade, let's say in 15 minutes time frame, all right, this first candle is mostly in the 4-hour time frame already. Okay, the first candle is in the 4-hour time frame already. So the second candle, which is the red one, you can be checking the second candlestick in the 15, 30 minutes or any lower time frame at all. But the first time frame will be in the 4-hour. The first candle will be in the 4-hour time frame. Now you can look at these candlesticks in any time frames at all, but to get more confidence and to be more accurate, the first candle should be on the 4-hour time frame. Okay, now let me go to the chart. Let me actually explain this to you guys. We'll go down to 4-hour time frame. Now this is scenario B. Now in scenario B, you can see that the first candlestick open. Let's say the first candlestick open, we got to our POI, and then it's moved to the upside, right? Now the second candlestick came out. The first movement that the second candlestick made was that it came down here. The second candlestick came down here before actually reversing and moving to the upside. You see that? So this price action is my favorite price action, whereby you have your first candle that creates wick, and then the second candle will come to fill that wick. But most of the time, the second candle will not pass the first wick before actually reversing and moving in your direction. Now for the scenario A, of which I still explain to you guys, just look at it. The first candle came out with this long wick, right? And now the second candle, which is this ashes color, as soon as the second candle opened, the first direction was that it moved to the upside to fill this wick, leaving this wick here on field, right? Move to the upside to fill this wick. Now what the market did was that it came down without force to actually hit your stop loss, okay, because this is a 4-hour 4-hour resistance level. So you see the way the candlesticks move. This is just the little knowledge I have on price action as I've now recorded this video. As time goes on, I'm going to be having more knowledge on them. But these two price action candlesticks, I see them a lot more in the charts, and each time I take any trades, I love to go to the 4-hour time frame to actually see the candlestick patterns it means. Okay, so my favorite price action is this B scenario, which is this one. That's a 15 minutes time frame, which is this particular one here, which is this one, whereby you have 2 weeks candle. Okay, if you find this video valuable and if you understood what I just explained in this video, make sure to comment down below in the comment section. and also make sure to like and subscribe this video. Okay, thank you very much. See you guys in my next video. If you watched the video to this very end, I truly appreciate you for staying to the ending of this video. Don't forget to click on your notification bell so that you'll be notified once I'm live. See you guys on my next video.